Welcome back to Agency Acquisitions and Exits. I'm your host, Peter Lang. Those who I speak to about selling have a lot of questions. If you don't have experience, well, you shouldn't do it alone. So today I have the pleasure of speaking with Todd Taskey. Is an investment banker and M&A advisor at Potomac Business Capital, with over 20 years being an entrepreneur, business owner, investment banker, business finance advisor. In addition to the M&A advice he and his firm provides and other investment banking activities, he's been a founding investor, a board member, and part of a management team of several business ventures. He's going to be a great resource to you as you're thinking about your exit journey. So let's dive in. Todd, thank you for joining us. What I would love for people to learn is about your business, Potomac Business Capital. Give us the background story.
It's short and sweet. I spent my first 20 years professionally as a financial planner and an investment advisor. And we built a small firm there. We sold it to a group that later was acquired by Goldman Sachs. And so I needed something else to do. I didn't want to have just one career for my entire life. I'd had the opportunity to walk through with clients. I thought I was walking through what a transaction was. And from the financial advisor side, I offered a little bit. And I had the opportunity to get involved doing a transaction. And I learned the business from that perspective. And then in 2011, was introduced. And so I had worked for another smaller firm, kind of learning the ropes, if you will. And then in 2011, I met a gentleman named Russ Dilworth you may know him from Dilworth Scaffolding in Toronto, Canada. 75-year-old guy, wonderful man. Kids didn't want to be in the business. He wanted to sell it. And we sold it to a gentleman named John McCain from the McCain potato fortune family in Canada. John has done great things with it. It's grown well. And so that's how I kind of got into it and got started. And then I had the opportunity to do some transactions in the digital marketing space, which I really enjoyed a lot. Enjoy the personality, right? That the industry attracts a certain personality type, and I tend to relate well with them or sympathize well with them.
That says a lot about you, Todd, that we like.
I know it does. And we're doing twice a week therapy to figure out what that does say. And when we figure it out, we'll let you know.
I often say that doing deals is seductive. Is that how it was for you? Like, what was the connection from going from someone who's advising, investing in businesses, helping in shepherd, lead other ventures, to focusing on transactions? Like, what got you in it?
There was a transition process there for me. The thing I enjoyed most about doing financial advice is something I think that we all seek in our professional life, which is the ability to have impact on another. And so that was an impact I would have with somebody over a long period of time. And you hope you're being successful and you think you're being successful, but it's 10, 20, 30-year journey with somebody. The ability to do a transaction in the way that we do them is a real important moment in a person's life, and I will be remembered in their life, I think, for a long, long time, and have the opportunity to make a real significant impact, not only in the entrepreneur or the owner of the business, but those around him and his or her family, but the management team, the executive team, and on from there. So it's really probably the most important thing I could think to actually do with myself.
It's something that bonds people doing a deal, right?
It's fantastic. It really is.
In that, you kind of hear like the desire you have to help shepherd people through an experience that is life-changing. What kind of external factors are in your way that you have to overcome or you struggle with in kind of accomplishing this desire of impact?
You know, I'm a Seinfeld fan, like I think a lot of people are. I don't know if you ever remember the episode where Kramer was riding the bus and a guy tried to hold up the bus and he kicked the guy off, and then the bus driver had a heart attack and he had to drive the bus, and people kept ringing the bell and he had to stop. It's a lot like that, right? There's all of this energy applied towards accomplishing an objective. There's emotion, there's finance, there's legal, there's all that kind of stuff. And it is just uh they're hard. These trophies, that I have behind me are hard earned, right? They're real. Getting a deal done, getting a deal done is hard. Getting a really successful deal done is really hard to do. And the way we look at the world, there's two types of transactions. There's the exit transaction, right? Where somebody says, hey, I've been doing this for 25 or 30 or 40 years. I don't want to do this anymore. I don't want to do anything anymore. So sell it. And that's relatively easy because the measure for that is who will pay the most amount of money, right? Because I'm done. And we do some transactions like that, but the vast majority are not exit transactions. We call them evolutionary transactions. And those transactions, people want to do more and they want to get bigger and they want to be exciting. And there's a whole bunch of things that people look to do that's not just the mathematics of what is more right now, but what is a combination of more with better opportunity and better people and more resources and all those type of things. And so that's what we focus on most and we do most often. And it's everything's a interesting, odd mix of a whole bunch of things that just come up all the time.
A lot of people have the maybe misunderstanding of the brokerage industry or M&A advisory that all brokers care about is getting the highest price possible. Not always the best fit because they're going to maximize how much they earn from the transaction. What you're describing is from a position of care. You want them to have the best deal for them, and whether that means the evolution of their business to this new state of prosperity and opportunity, or an exit, riding off into the sunset and doing the next thing. It's really important that you have a partner who understands that. And I can hear that within your story, but also in the people I've been able to hear you help. When building up this company, what are some of the things that you are faced with internally? Because externally, you're talking about deal factors, right? The deal dynamics, things that are kind of outside of your control and any seller control, which is the interaction points to get a deal done. What does it look like for you? Like, what do you struggle with working with clients in this industry?
It's a really great question with multiple layers to it. And one analogy I use and I tell clients often is that when you get in, if we're going to do a transaction, it's kind of like getting in that yellow, rubber boat at the top of the river and you're going down the rapids. And if I'm the guide in this story, I'm pretty certain we're going to get to the bottom of the river. I'm not sure where every nook and cranny is because the river's always a little different and the flows are different and on from that standpoint. Most likely at some point, if we're having a fun ride, this thing's going to tip over. And when it tips over, holy hell, people will be throwing oars at one another, F-bombing people, just all sorts of, and my job is to say, relax, Peter, we're going to flip this back over and I need you to crawl back into the raft. We'll get everybody back in the raft and then we'll continue on to our journey. And then we'll get to the bottom of the river and we'll sit around the fire that night having beers, telling stories. And do you know what we'll talk about and remember the most? The time that thing flipped over. Do you remember? Remember you were F-bomb? Remember you were throwing beer cans at me and I was ducking and rocks were coming, and and it's a good analogy because that's what it's like. And we need to keep our wits about us. While I've been down the river a bunch of times, you haven't been down this one before. And there's big rocks in the river. And you've got this little helmet on your head, but you're not quite sure what to do right. And we talked about it all. But now that because the water's way colder than I thought it would be, and the currents are going sideways, not downstream. And so that is a rambling answer that I'm getting lost on a little bit here, but that's the way that I think about it, and I tell clients to try to think about it. And the objective, moving on to my second example here, the objective of what we're trying to do is get a deal transacted.
Yeah.
But
Get
one
a
thing I
deal
tell
done.
clients a lot is we're going to get clarity from this process. I was talking with a guy earlier today, and he's like, I'm not quite sure of the timing. I'm not quite sure of this. I'm not quite sure of that. I said, well, here's what we're going to do. Let's start the process. And if the reason we won't do a transaction, and we're going to find a good buyer, right? Because there's plenty of them out there. His business is sizable enough, private equity will be interested, a bunch of people will be interested. There's a chance we won't get the value that you think you should. And if you decide to pass on it, we will know very specifically why you didn't get the value you thought you should.
Yep.
The great thing about private equity or any buyer, they got a checkbook, they know the space, they don't care about your feelings. So they will tell you, you don't do enough of that for us. You're doing way too much of this. This ratio is too high, this ratio is not enough, whatever it might be. But if you're going to work hard for the next year or two, now we know exactly what to work on, exactly what to improve to get a better value at that point in the future.
Uh, the idea behind it is Mr. Market will tell you the value of the thing it's going to
If
transact.
you ask Mr. Market correctly and politely.
Yes. And that's what's key, right? What was the epiphany for you in how sellers should interact with that market?
A couple of things. Number one, always be honest about what you're doing, right? If you want to sell and leave, let's not try to trick somebody into thinking you're going to stay here long because that's what they want, right? We live by this credo that we'll find a better buyer, right? Don't ever lie to a buyer. Always tell the buyer what you want to accomplish because we're in control here, not them. You know why we're in control? Because we'll find another one. That's why a lot of the deals that you hear about that don't turn out well is a guy was approached by somebody or there was one potential buyer and that buyer wins almost every time, right? So if you go through a process and you have multiple buyers, you get multiple data points, you view a problem from multiple perspectives, and you really understand what you have. Might be a lot more valuable than you thought, might be less, might be a piece to a bigger puzzle, might be a whole chunk of that puzzle. And once we start to know that, then we can start to make really good decisions about what it is that you want to accomplish.
Selling or the activity of selling is like a muscle, right? You don't want to use that muscle for the first time in the most meaningful way that's transformative for your life. From what I hear you say, it's similar to what I preach, which is you got to practice, you got to be ready, you got to have the right people on your team, or else when you finally want to go to sell, you have the potential for disappointment.
True. You know, it's interesting. One of my current transactions that's working quite well. In 2019, we did a transaction with a group out in Colorado, and they were about 2 million of EBITDA on 10 million of revenue. Performance marketing, paid and SEO, not much email, not much other stuff. And so we got a transaction. There's a whole long story behind how that came to be. We got a transaction for them, and our guys got 4 or 5 times EBITDA in cash at close. They got a 1-year earnout for another million, and they retained 40% ownership in the business, partnered with private equity. That was, that's So 3 years later is the end of 2022, right? 6 months ago. They finished 2022 at 16 million of EBIT, from 2 to 16 in 3 years. They did 3 acquisitions, maybe it was 4 acquisitions. I think a business like that probably trades for 15 times, 14 times, 13 times, right? That's probably, if you do the math on that, is probably a $300 million business or $250 million business.
It's a significant increase in enterprise value.
They have about 30 million of debt, and my guys have been diluted down to like 24, 25%. So approximately 3 years ago, they sold 60% of their business for $8 or $9 million. And the 40% they didn't sell today, probably worth 40 or $45 million. And as importantly, for the last 3 years, they've been having more fun than they've ever had. The owner is 50 years old. And he said to me, so I'm 50, so I've been saving my money and we've been successful. But when I got that first chunk, that first $8 million, that was it, man. My risk tolerance went from 3 to 10. I mean, we're playing with house money, and all the money we're going to spend going forward is private equity's money. That's a lot easier to spend. And that's been a huge win for them. The groups that they've partnered with, the work that they do for their clients, all that stuff, all of it's better. And when I can play that much of a role in making that happen, because I'm happy to say, the first 2 acquisitions they did were also clients of ours. And finding the culture and personality mix to make those things work is the greatest fun I could possibly have. So it's wonderful to do.
Yeah. You explained something that is important for every listener to know, is there's different thresholds of running a business, and taking chips off the table, playing at a higher level. It's a different version of you. And I'm sure you've had clients who ran their agencies or their businesses for a decade or more, and never did that step up in value or step up in potential partnership. And it's a very different narrative. Can you unpack that a little bit? Because you hit on it, right? Playing with house money, deploying capital, other people's money, and then your risk of your ability to do things you wouldn't have allowed yourself to do otherwise is transformative. And we like to say you should have more than 3 transactions in your lifetime. So what do you say to that decade, 2-decade old agency who has yet to really level up because of their resilience, we could say?
So I tell this one story. So I used to coach 8th grade boys football. To be fair, I was the assistant coach. And so
You did all the work is what you're saying.
first day of practice, we have 40 kids that show up. You know what that means? That means we have 25 quarterbacks and 15 running backs. That's what we have. And so I would always give this talk. I'd say, guys, here's the problem. Your parents have lied to you. And they lied to you because they love you. But you are not all the fastest. We're going to find out right now. And we line up, we do 40s. And, the same 3-4 kids are always first. Same 4 or 5 kids are always last. And you get that big chunk in the middle. And we'd sit them down and I'd say, every single person here, we need you on this team. You are absolutely important. What we need to do is align your value, your capability set with what we need as a team. Then we as a team will be successful and you will be at your highest and best use, regardless of what position your parents think you should play. And so when I look at your business, I see an offensive lineman. And we need them. We need them, right? But you are not going to get 12x or 10x or 8x but if you want to do something, here's the question. You've been doing this for 20 years and here's what you've got. If we want to get something different, we should do something different. What we could do is take that, bolt it onto a rocket ship, take some cash, take a bunch of their chips in equity, Let them do their thing. And then you know what I need you to do? Get your arms out and take one step back and protect the pocket. This is what you're best at, man. Let's go find that. And to follow on the analogy, if I was an agent, I would go find a quarterback that led the league in sacks last year, and I would call that general manager and say, "Hey, you need a right tackle because I got a good one."
100%, Todd. That's one of the most critical bits of information owners need to consider when they're talking about exiting their business. Now, you hinted on something. I wouldn't mind you unpacking this. Part of scaling an agency in our industry is not just organic, predictable pipeline or predictable prospecting and retention of clients, it's acquisitions.
Mhm.
A lot of the examples in anyone who's doing aggregation like we are, private equity or roll up, is we're growing through that second engine on this plane, which is buying businesses to solve our business problems and expand what we're capable of doing.
Mhm.
Touch on that a little bit. How, when you interact with a seller for the first time and they haven't really thought about how they fit into a roll up model, what are their initial questions? What are their concerns? And how do you help, for the ones you've gotten over the line, get them there?
Yeah. So, a couple things. So, let's do nomenclature first. Roll up, in my mind, means you have an SEO agency. We're going to go buy a bunch of SEO agencies and roll them all together. And then we'll have a bigger SEO agency with better margins because we were able to carve out some of the repetitive expenses. Alternative to that is an arc of services. And if you look at the big successes in our space, W Promote, Power Digital, Tenuity, and the like, all of them have created an arc of services. So when you come here for SEO or paid or content or email or social or whatever it might be, we can do all of it because almost, or depending on the size of the customer, they're doing all those things. They're just not doing them with you. So from that perspective, I've got some folks that only do SEO. Why don't you do paid? Well, we're not that good at it. And I'm afraid if we don't do it well, people are going to think we don't do the SEO well, and I don't want to take that risk, right? So you will always be an SEO agency, and you will probably lose customers to those that offer an arc of services, which is the direction the rest of the world is going. Do you want to do something about that? Because I hear from guys still a lot. I didn't know you could do this. Do what? Sell your business and still work at your business and still have an upside, right? So part of it is just creating awareness, and part of it is I'll give you two ends of the spectrum. We did a transaction a couple of years ago, one of these trophies, Worth e-commerce. Dean's a wonderful guy. They're roughly $1 million-ish of EBITDA. He wants to partner with private equity and take on the work. I said, Dean, you're just not smart. You're just not big enough, right? The math doesn't add up for that. What we could do, if we found a platform company that was recently acquired by private equity, so on that value scale, right, they're still here. And you could be the first or second tuck in, you'll get almost all of that value accretion where you play a role. So his business, email marketing for e-commerce customers only, this nice little box.
Yep.
Those guys want the buyer, SmartBug, which is a HubSpot partner, they wanted to have a different service offer. Dean had 60 clients. They have 450. You know how many are doing email marketing with them? You know how many salespeople they have? Dean said to me, Todd, if I get 15% of their customers over the next 3 years, my business will double. The earnout will be easy. And the buyer said, yeah, no, that's what we want. We need you to close these deals. We'll bring them, we'll line them up, you knock them down. Right? So when you do a deal like that, and the bigger upside is when you can get your earnout because it's better for us and it's better for you. That's how you structure deals that work, right? Is creating that together.
And you're referring to something that's called, you can sell into something that's bigger rather than simply just look at selling your business. And reverse merger SPAC and when we look at things on the actual, capital market side of it, this is a small main street, small business way of doing a very similar tactic, which is the expanding pie principle. You have a smaller piece of a much greater value. And there's a significant amount of people who 2020, 2008, they don't want to go through this next difficult period, rising interest rates, uncertain markets, if you dare call it the fourth turning, however we want to call it, right? This is an opportunity for you to uh, be a part of something and not just go at it alone. How often do you talk to sellers who are motivated by no longer being lonely, being the only person at the top? How often is that the case?
It's there's a couple of nuances to that. Number one, often, right? Because it's hard and nobody cares like I care. And no one else has skin in the game. I pay people a lot of money, but if things go wrong, they just go take a job with those guys. There's no downside for them, right? I'm the one that has to make this whole thing work. So that part is a driving factor, number one. Number two, the stuff I love to do, the stuff I'm best at, in the early days, I would do that 80, 90% of the time. Now I got a whole bunch of people here. We're doing management meetings. We're doing this. I got finance. I got to meet with the bank. I'm spending 40, 50% of my time in my highest best use. And the rest, I'm running a business. Some people love to run a business. Some guys want to go back to, I hear probably the most, if I could go back to being a sales guy, I would love that. I don't have to worry about utilization rates. I don't have to worry about, how well we're staffed. I don't have to worry about AP. And I have 100 things I don't have to worry about. I would love to go back to doing that. And if so, that's terrific. If you want to manage a business, also fine, right? So it's just a matter of understanding and learning what that is.
We've touched on it a little bit, but walk us through a client background. Like let's use, if you can share, as an example, as a use case, someone who you feel had struggles, hit those rapids during the deal, right? Maybe tossed a few people overboard and you scramble to get back in. But ultimately, what they were looking for, they were able to get, even though at times it seemed like it wasn't going to happen. So I think it's important to note that all deals are messy. Transactions themselves, integrations are messy. These are things you're signing up for. And the vast majority of small businesses are not operating ready to sell today.
Correct. So how do we do it? So
Yeah,
I'll give you an example. We did a really good transaction in December. My client they do digital marketing. They have created a data platform for large D2C brands to use their proprietary data so that they can acquire and buy media more efficiently, better ROAS, right? They spent a bunch of money to build the software. And anyone that spent a bunch of money to build the software knows we got to spend more money next year and the year after the year after. And we're bootstrapped and scrappy. That's a bad combination in the software business, right? So what we would like to do is be part of something bigger where they have those customers at the ready and a sales team to be able to get to them so that we can do a transaction. And then, right, so that was their objective. So I'm going to do rough numbers here. Let's say my guys had approximately 700,000 of EBITDA. Let's say 800,000 of EBITDA and about 700,000 in current year expense to develop the software. In my view, if they didn't have software, their EBITDA would have been $1.5 million. Make sense? So I always tell clients, important tidbit, you are what your revenue says you are. My guys, almost all their revenue, 94, 95%, was from services. They sold digital marketing to these large D2C brands. Some of them were actually paying to access the platform, right, in a SaaS model. 4 or 5% of revenue is not, you're not a SaaS business.
No, you're not. You're not in the annual recurring revenue category of
Correct.
SaaS.
So we did a transaction, private equity backed group, signed under LOI. This was last summer. And then we got through the diligence process and everything else. And then we got to private equity and they're like, listen, we're not going to be able to underwrite this deal on $1.5 million of EBITDA. To which I said, I don't care what you underwrite it on. You just need to hit the number that we've agreed to. See, that's going to be a problem for us. What we didn't realize is, and it was a bunch of blah, blah, blah. They wanted to retrade the deal. My guy said, absolutely not. We're not going to do that deal. So we did a transaction in December. So my guy said, all right, we're done, exhausted. Let's just go back to work. I had this other guy that I had known really well. He's got a great business, private equity backed. It's a powerhouse. They said, Todd, I got to talk to the guy. Anyways, I said, listen, here's the deal. The deal is they're $1.5 million of EBITDA, not based on GAAP and not based on accrual, based on my mind and the way that I view the world. You can disagree with that and be right, but we won't get a deal closed. If you value them at this number, which by the way was 6 times on the $1.5 million, right? Plus, you know what my guys want? My guys want to roll half of it in equity. They want a part of the mothership. They believe in what you're doing. You just have to hit those numbers. Yeah, I think we can get there. Oh, we've been down I think we can get there once. Needs to be in an LOI, needs to be this. So we closed that deal in December, right? That's what, 5 months ago? Talked to my clients the other day and talked to the buyer the other day. Everybody's thrilled. They're killing it because the match was like this. And because the buyer was not focused on how much can we squeeze out of this guy right now, they were focused on what's our exit in 3 or 4, whatever amount of years from now. So that would be, I think, one example.
There's a critical part that you emphasized in that, which is easy to overlook. The economics of the deal were not solely based on the first transaction. The economics assumed a second transaction of value being realized from this company, from the two businesses working well together. You also reference private equity multiple times. And I think this is also very important. There's a lot of people who learn business buying, a lot of people who want to start running a business. There's a silver tsunami, a transition of wealth and businesses. So there's a significant amount of opportunity to buy businesses and agencies. But there are certain types of buyers that creates different outcomes for sellers. And so you've referenced private equity a few times, which is where a lot of the higher economic reward for a transaction is realized.
Mm-hmm.
And then there's this evolution side where maybe you don't have a company that is significant value, but you find someone else who can operate it for you. Have you had any of your clients who fit that category where private equity just wasn't it? Big strategic wasn't it, but they got a good home, the employees got taken care of, and actually they got some upside for something that may not have had the value they were expecting.
So for us, most of the transactions we do our clients are somewhere between $1 million and $5 million of EBITDA. So in that range, we can always find a good home. I mean, we know this space. Most of these trophies behind me are digital marketing transactions. So we know that space really well. We know who's looking, we know who needs what, and on from that standpoint. But one thing that jumps to mind, there was a gentleman, he's 72 years old. He's in Chicago, digital marketing shop, half traditional, half digital, focused on the automotive dealer space. So a real niche from that standpoint. And he's roughly about $1 million. There's a buyer that is a very consistent buyer that paid 90% cash at close and the balance a year later. They gave him a fair value, probably lower end of the range, but for 90% all cash for that business was terrific. So when I met Ed, who is my client, He said, I think I want to try to do a transaction with my employees. And by the way, employees are the buyer of last resort, in
Yeah,
my
unless you're running an ESOP from the very beginning and your open book management,
all right.
they're the ones who will pick up the scraps if you have
So
no other options.
yeah, and it's very much like that. And you get paid out over a long period of time and on and on and on. They said, listen, here's our rule. We will buy a company where the owner wants to retire. We will put in new management, we will pay X, we'll do it all in cash, and we'll settle quickly. And I was just waiting, right, for the other shoe to drop. The other shoe that dropped was the wire when we closed. Those guys were terrific to deal with, worked out great. And then I brought them a couple of others where guys that want to transition away from their business midlife, want to go do something else, don't want to, whatever. I'm sick of the agency business, is too much for me. Not that doesn't fit our model. I'm like, yeah, he wants to, like, well, does he want to retire? No, he wants to go do something else. Yeah, we don't do that. And so it doesn't make sense to me, but I respect somebody that says, here's the box. We know how to fill this box and we know how to be successful with it. So there's a lot of different buy. This is what I mean by just let's be honest about what you want. Let's, and if you tell me, obviously, but it takes more work to find a better buyer. We'll do the extra work. We'll find the better buyer. We just need to get the fit.
It's much like finding the right seller from a buyer's perspective.
Yes.
You'll find the right seller just because you had a few conversations with someone, especially if this is your first time doing M&A or growing through acquisition. There's so many scenarios, people, motivations, opportunities. It just requires spending the time. And if you don't have the time, that's when you need someone like Todd, who can spend the time, has the networks to simplify and expedite the process 100% over.
It'll take you, if it goes smoothly, 4 to 6 months, right? And during that period, that's plenty of time for your sales to dip like this. And if there's a number one reason for a deal being delayed or called off, it's because you're trending down. And it's a lot of work. You've done it. It's a lot of work and time commitment to do a transaction. A lot.
Yeah.
Right. And they're
I think
tremendously rewarding when you do them, but it's a double job for a few months.
we tell that to not just the people we acquire, but the people who are in our community, that if you're going to sell, you're adding another almost full-time job, unless you're operating perfect books, unless you have an executive team running your company and you can dedicate a significant amount of time to the exit or selling process. It's a distraction. And I will, I say this openly as an active buyer. Time is on my side. And on the seller side, you want to go to market quick, you want to be ready for it, and you want to transact. Because the distraction on your business, especially if you're the driver, it could be significant. And a lot of buyers, and we don't do this, but a lot of buyers do take advantage of companies by dragging out the process to potentially retrade a deal. And fundamentally, you don't retrade deals. We say this over and over.
And retrading is tough. And it's interesting. I was talking to somebody today, and that I've known in the space. He's got a digital marketing firm in the legal space, and got a nice business. He's 2-3 million of EBITDA. Well, we should have a deal in that space, a little bit larger, close here in the next 2 weeks. So one of the things I said to him is, you may not know this, but I've been working on selling your business for the last 6 months, because I've been selling a very, very similar business, same vertical, different revenue, different this, less technology, whatever. I know people looking. I know, and this guy went for a really nice multiple. I know people thought that was too, because he got software in his business. I know people think that was just too much, that would love what it is that you're doing. I know people that didn't like that they were doing this and this, that you do, and they would really like that. I know some things you're doing that he wasn't, and they won't like that. But I kind of know the community and the pool of people that are interested in exactly what you're doing now. There was a couple groups that passed on him because they had recently done a transaction of something else and couldn't dedicate the time to integrate two things at the same time. Those guys are going to be back in market. There's a whole bunch of things, right? And that shortens the time and the distraction and all those things that make getting a deal, more difficult or easier.
The last bit of advice I would love to leave the listeners with is who not to sell to. I'm sure you've had people who you've weeded out over the years, right? You've created a network of people that you've would prefer to do transactions with, who you've done transactions in the past with.
Mhm.
But when you talk about good homes for sellers, what are some of the key things people need to be thinking about when being approached by prospective buyers and who to avoid?
Yeah, I would say, following up on your metaphor from earlier, you have to be strong when you do a transaction. And I don't care if emotionally and mentally you're strong and tough or not, it's a process that will weaken you. The part that makes you stronger is to have multiple interested parties. I don't like to bluff when we're trying to get a transaction done. What I'd like to say to people when they say, we think value, I'll make it up, right? We think value is about 5 times on EBITDA. Like, geez, man, I'm hearing something different from the market. What do you mean? I mean, all the other people we're talking to are saying it's higher. Well, and it's hard to argue with that, number one. But if I come back to you and I say, Peter, here's our 4 offers. This guy came in at 5 times. I don't care. Tell me about these 3. All these guys are in the range we thought between, I'll make it up, 6 and 7. How much cash, how much equity, how much earn, how much blah blah blah, right? I don't care what that guy says. If that's the guy that called me and it's the only guy we're talking to, and I got a battle over 5x and why we're not, it's not the way to do it. You know why? They have the checkbook. They're in control of timing, they're in control of everything. It's going to get bumpy during due diligence 100% of the time. The way we get some leverage during that process is that those guys know they won. When they sign an LOI, they should be high-fiving each other back in their office. Huge win for them. Because if they stumble, I was going to go back to number 2 and number 3. They'll be here in a minute. Right? So, and I want them to know there was validation in our offer because if I'm doing my job well, we won it by this much. We barely beat the other guys out. I'm not giving it back just because EBITDA was a little bit off here, or we thought customer concentration was 15%. It turns out it's 17%, right? Those are reasons to nick you. They need to know if you think you're going to nick us, we're moving on. I got a line of other guys here. That's how you get a transaction done. We keep pressure against the other side.
And it's hard if you've never done this before to apply that type of pressure in a negotiation, which is why it's very good to have professional help in doing so. Todd, for those who are listening who want to reach out to you, where can they find you?
Best way, PotomacBusinessCapital.com. I'm on LinkedIn. I'm pretty active on LinkedIn. I'm happy to connect with anyone there. Those are really the 2 best places to reach out.
Awesome. So Todd, thank you for sharing your knowledge and being available to the community. We appreciate you.
Oh, great to be a part of the show. Congratulations to you and Ava and all the things that you're accomplishing there. And thanks for having me on the podcast.
Cheers.